Hello, guys. This is Francisco with Valorizo Capital, and today we're gonna go through the trade review of the week. For this week, I'm gonna talk about my trade to the long side in GDX, which is the gold miners ETF. And before starting to go through the patterns and what was my trigger, my entry, and my exit, I'm gonna make a quick mention for you guys that don't follow me on Twitter. Make sure to do so. My handle is at Valareso Capital. And here on Twitter, I talk about my setups and I usually do it in a real time basis. So here on the 14th of February 14, I was talking about GDX and mentioned that the miners look ready for more upside, looking to take a starting position the next day. And as you can see, here are the important levels that I was watching with the blue lines marked. And then the next day on the 15th, as you can see right here, I mentioned that the pullback in GLD and GDX seemed like an opportunity to get long. So if you don't follow me yet, just make sure to give me a follow, check me out. I post a lot of daily setups and I also talk about my ideas in the market, what is the tone for the day, and I also mention the things that I'm looking for future opportunities as well. So now let's get back into the setup right here with GDX. And first of all, I want to go through the position that I took on GDX. And here is the as I mentioned on my Twitter account on February 15, I took my starting position in GDX. I bought 115 shares. Then I added some of the same day near the close, since GDX was closing at the highs of the day after finding support at the 8 exponential moving average, and that's something that we're going to look at the chart in just a second. And then I added some more the next day that we were getting a strain on GDX as it was starting to break out. And then I took my profits that same day before the Fed announcement. And we're going to talk about why do I think that that was a mistake and why I had so more upside potential that I unfortunately missed by taking my profits too early instead of just managing risk by raising my stop. So now let's get into the back into the chart here. And here is GDX. And the things that I have pointed out here, we can see that GDX and mainly on basically gold was trading inside a box, as we can see right here. And let me just change the color here really quickly. Yeah, basically the price was trading inside this box, and this is something really easy to understand, right? You just can basically just draw a trend line between the market that we had here. We can see that this level 35 was acting as resistance a lot of times, and we can see that this level 2890 was acting as support, as you can see down here. But what is really important is that you have to, and I'm going to make a video talking about basis and price patterns. But what is really important, you have to understand that what we had here was way more constructive than we had that of for what we had over here, right? Here we had a move that went, basically we have a really strong move to the downside, and then we had a B recovery, right, that went right into resistance. But what happened after this move down here is that we actually had some accumulation going on here. And we can see that a really important level was this level right here, somewhere around 3250. And we can see that the accumulation was taking place and we actually make a double bottom. And after making a double bottom, for any of you guys that follow the TTM squeeze developed by John Carter, we can see that the price is starting to squeeze. And basically what the squeeze means is that the price is starting to contract. And as soon as the price is starting to contract, we can expect to have an explosive move the next time price comes out of this contraction. So we come here, we can basically see that we had a flat top right into here, and that here, as soon as the squeeze was developing, as soon as we make this double bottom and we had this hammer bar, we can see that we also had a small flat base right into here. And as soon as the price got rejected at this flat base, this little shelf you can call it, we actually made a higher low, and we actually had a bullish cross of the 8 exponential moving average above the 21 exponential moving average. And that basically just means that the short term exponential moving average is moving above the more of the longer term, more of this lower of this lower moving average. So basically, the faster moving average, exponential moving average, is moving above this lower exponential moving average, and that basically is telling us that we're getting more buying than selling into the direction of the cross, right? And you can see that as soon as we got the cross here, we can see that the 21 acts as a support. And the next day right here, let me just zoom in here a little bit. We can see right here that we actually close at the highs of the day with really strong volume. How do I know that this has really strong volume? I have this dot, which is an automated is an automated thing that I have coding to my bars. But if you don't have this, right, you can basically just come to indicators and some way to analyze the volume. I use the enhanced volume developed by Trader Lion, and this is actually a free tool that they offer, and it's really useful. And you can see that this day right here we had this very big bar of volume, which they called it the pocket pivot volume because we had higher than above average volume, and we actually have a bullish closing range in the bar. So that's actually really, really important here. And most importantly, that we had a close above this shelf right here in really strong volume. So that what is that suggesting? That is suggesting that we are actually having a lot of committed buyers looking at this setup as well. And then what I want you to notice is the flat top that we're having just above it, right? So we can see that this level is really important, and as soon as price got above that level on the 13, we on the 14, we actually had the pullback into the 8 exponential moving average. And if you don't feel comfortable buying pullbacks directly into the exponential moving average, just wait for the close of the day. And as soon as we got a close right there at the top of the candle, you can assume that the exponential moving average is being supported by buyers. We're seeing that they actually bought that candle, and then we can come right here into the volume, and we can see that that day in which we actually drop on lower volume than the 2 days that we actually advance. That's telling you that there are not many sellers, and even though that we have lower volume, we actually close at the highs. So there was a high probability of continuation in this day. So as you saw in the things that I showed you at the beginning of the video, my first buy was on the pullback and my second buy was on the close since we closed near the highs of the day. And as soon as we start taking out this candle right here, I make the additional buy for my shares. And as you may know, the Fed spoke on these days while we had the Fed minutes at 2 in the afternoon, and I saw my position just a little bit before that. So I saw my position somewhere around this candle, the top of this candle, and of course I missed the gap and go into the level of resistance the next day. And that was on incredibly strong volume. So what I should have done instead of taking all my profits here should have been taking just partial profits and then just set up a stop right into this level right here so I can let some of my additional profits work the next day. But of course, we're human beings, we have emotions, and this is real, right? This is real trading, and this is something that I'm gonna take notes and just get better, just get better in the next trade, right? That's the important thing here. And of course, if you guys want to trade GDX into the long side, I think right now the GDX is a little bit extended. And most importantly, right, we're basically against resistance here. So I think, in my opinion, the GDX is perhaps going to flag here a little bit, form a kind of a cup and handle. And if we actually form a handle here, we can see this volume dropping here a little bit. We get some tight closes. I think that after getting some tight closes and forming that cup and handle, I think that actually GDX can go into the next level of resistance that I have here on my chart. So I think there's more upside, right? We actually, it's very important to notice that we actually have a gap, right? A gap right here that we have to fill into the next level of resistance. So I continue to think that as long as we continue to see this volume here, I think GDX is a very actionable play for more upside. But of course, be aware that the price is now extended, is very overbought since is really far from the 8 exponential moving average. But of course, I think this is an actionable setup coming into the future. So that's basically what I have for you guys here. If you want to go again and check out the buys that I made here, right? This ended up being a really nice game for me, a little bit above average, right? My total return on this trade was 2.42%, and I made somewhere around $300 on it. So it was a really nice trade. Of course, I wish I held a little bit more since I missed that up, since I missed some of that upside. Could have been a very more bigger winner for me. But of course, I made some mistakes taking my profits too early. But it was a really nice winner nonetheless. So thank you so much, guys, for watching. Make sure to like and subscribe. I usually post these weekly. I post these weekly trade updates every week, and I try to do them as as more. I try to explain my best when doing these setups, right? I try to go through my exits, through my entries, and also what are the things that I'm looking in the chart so that you can understand and also get very good at this. So thank you so much for guys for watching. Make sure to like and subscribe, and also make sure to follow me on Twitter. And I'll see you guys on future videos. Thank you so much. Cheers.